And what's affecting that? Is it inflation that's affecting that?
It's the interest rate rise and the inflation. Yes, it's inflation. There's another thing I want to talk about, and this is about what's happening with builders at the moment, because there's a lot of builders going broke.
Yeah.
That's the fact of it. We can't hide that fact. And how is all these builders going broke going to affect the market?
And
That's
why?
important.
Yeah, and the why.
Now, I've got 3 out of 3 so far. The last 3 booms I called and predicted 100% right.
You did, George.
So I'm going to tell you and predict when the next boom's going to happen, right? Because, if you think the last boom was big, hold on to your cotton socks. Because
Right.
next boom
So grab a notepad and a pen so we can write this down.
Absolutely, definitely. So the share market's in free fall, right? And there's always that big debate. There's a big debate about should I invest in shares or property, right? And what's happening is we've got massive inflation. And when there's inflation, soft assets start falling. I've been talking this up for a while. And really, if you want safety, you've got to get into hard assets. Hard assets are the only way to go.
Do you want to explain the difference between soft assets and hard assets for those that may not know?
Yes, I'll explain the difference, because really at the end of the day, what do we want? We want hard assets. What don't we want? We don't want soft assets. And what's the difference? Well, a soft asset is something that you cannot really, that's not tangible. So let's say for a share is not really tangible. It's sort of not there. Even money is on a piece of paper. It's not real. It's a token. I mean, if I give you $100, Charmaine, the only reason the $100 got any value is because the government have printed $100 on there, and we've all decided it's worth $100, and we all partake in this whole illusionary belief that it is worth 100.
Correct.
Now, if like in Zimbabwe, suddenly the people didn't believe it was worth 100, what would happen? It wouldn't be worth 100 anymore. And that's why Zimbabwe ended up with $100 billion, $100 trillion notes, right? Seriously. I mean, after World War II, or just before World War II, I think it was, when Germany had massive inflation, it was so bad that every couple of hours, it cost more to buy something, and people had to fill up a wheelbarrow full of money and take the wheelbarrow to go to the shops to buy a loaf of bread.
Oh, wow.
Right? And that's what happens with massive inflation. So what do you think is happening at the moment?
Massive
inflation. Exactly, massive inflation. So what needs to happen is, one, if you got any soft assets, get out now. Now's the time to get out, because the soft assets is like the Titanic, and there's a big iceberg, big iceberg, right? And it's raising its head as inflation, but it's a much bigger, 2/3 of it is below the waterline. You can't even see it. And the soft assets are just slowly chugging along, thinking, hey, we're safe, and they're going to hit this iceberg. Now, this is the first step. What's happened with the stock market? So the Australian stock market lost $67 billion overnight.
Oh, wow.
Right? So it was only recently it was booming, right? But investors are down 20, 30, some even 50% right now.
And what's affecting that? Is it inflation that's affecting that?
It's the interest rate rise and the inflation. Yes, it's inflation.